Welcome back to another episode of Proof of Vision with Aliyah Research. Today I had on Gabe, DeFi Growth Lead over at Mantle. Even though Gabe's official role is more focused on the DeFi growth side of things, we discussed a ton of stuff, covered all vectors, AI, fintechs, neobanks, because that's the direction that Mantle is really pushing right now. For anyone unfamiliar, Mantle is the Ethereum L2 ecosystem aligned with the Bybit exchange, right? And actually that relationship between the exchange and the L2 is becoming more formal over time. So you just had two key executives from Bybit join the Mantle advisory board. So I think we'll be seeing a lot more integrations between the two beyond the ones that already exist. So Mantle already has one of the largest treasuries in all of crypto. This allows them to kind of pursue a lot of like cutting edge stuff, new use cases, initiatives that most chains just cannot afford to spend investor money on. So we spent most of the episode exploring all this kind of stuff. We talked about Mantle UR. This is Mantle's new neobank platform. So people can spend stable coins in native currencies, not just US dollars, right, around the world. We also touched on MI4. This is Mantle's their own index product. It's gotten a lot of institutional adoption. And then we also talked about Mantle X. It's kind of their exploratory AI lab, actually. It's pretty interesting. And then, of course, it is Mantle. We had to touch on DeFi as well. So, yeah, Mantle has a lot going for it right now. It often doesn't get the credit it deserves, you could say. It kind of goes under talked about on crypto Twitter. So, yeah, give this episode a listen. Welcome back to another episode of Proof of Vision with Aliyah Research. Today I have on Gabe, DeFi Growth Manager over at Mantle. Gabe, do you maybe want to give me and the audience a couple minutes, just personal background on yourself? Where have you been in crypto and how'd you end up over at Mantle?
Yeah, for sure. Thanks, Daniel. Great to be here. So maybe I can give you like a breakdown of like how I sort of came to be in like this whole industry in the first place. I started in crypto back in like 2013. So that was
Hmm.
that was a
Long
long
time
time
ago.
ago. I was pretty much basically just reading like the Bitcoin white paper. I was still in school at the time. Um, and it was really interesting. I was generally a very tech savvy person. I grew up with computers, played a lot of video games, and the Bitcoin white paper is something that stood out to me at the time. But being a broke school kid, I couldn't get my hands on any Bitcoin. So what I tried to do was essentially start a like try my hands at like Bitcoin mining, right? So I tried to use my home PC, my personal computers, to try mining some Bitcoin, but yeah, that didn't really work out, because like obviously it's like you're up against like so many other more
Right.
institutional like bigger players who are have faster PCs, faster CPUs, and you can't really keep up. So yeah, I gave up after a while. I tried to open like a Coinbase account. I couldn't KYC given I'm based in Malaysia. Um, and I also tried to go through like the only way I could buy it from Malaysia was through like Bitcoin forums, right? So it's like P2P.
Hmm.
You send money to someone, some random person, through PayPal, and hopefully you get some Bitcoin back. So yeah, hopefully
Hopefully.
it's a very very there was a lot of trust involved, and given it's a trustless uh, environment, it wasn't viable for me, right? So I kind of left the space after a while, and the time when I came back was after Ethereum made its first like big boom cycle. There was a DeFi summer. I came back in like 2020. Got involved in like the whole Terra ecosystem. Basically went all into like the Terra ecosystem. Got in at like $13. Sold it at like all the way at like, I would say rode it all the way up to like 20. But then obviously it didn't sell enough, right? And then
Okay.
as many people have experienced before the massive crash and the whole collapse of the ecosystem. So yeah, been through multiple cycles since then. I That's how I started my first job in Web3 as well. I started writing on Twitter because of like the Terra ecosystem. I was very involved in like the whole community at the time before everything collapsed. And that's where I joined like Delphi Labs, which was building more DeFi protocols, and
Right.
they were very involved in like the Terra ecosystem. Was there for a couple of months, then I moved on to work at Bybit. So I was at Bybit for a couple of months as well. I was mainly very focused in like DeFi. I was doing a lot of writing, a lot of like long-term like DeFi deep research, that kind of stuff. Mostly for like institutional investors, people who had really like that kind of research. And yeah, after that, my team got scouted, and we eventually joined Spartan Labs, which is more like a Web3 venture studio. So was mainly dabbling in like product research, and also like DeFi a little bit. Just trying to figure out like what's like the next thing we can build, what are some interesting opportunities. And yeah, I was there for some time as well. But yeah, eventually ended up joining Mantle because of some colleagues, ex-colleagues from like the Bybit side, who also joined the Mantle ecosystem. And yeah, ever since then I've been leading DeFi. So pretty much on like the BD and partnership side, very much focused on like growing the ecosystem, working with early stage developers, and yeah, I would say it's been quite a journey since then.
Yeah, great intro. I appreciate it. So yeah, I think I have a pretty good like kind of been all around, right? Lab slash incubator experience, and then yeah, working at the decentralized exchange, and then over at Spartan, and then now yeah, kind of on the protocol side, um, leading growth, DeFi growth over at Mantle. So I think our audience like they'll be pretty familiar with Mantle. We've kind of like yeah, we've covered Mantle. We've covered even like the ecosystem projects, somewhat extensively. But for anyone who's unfamiliar, can you kind of give a brief overview of Mantle, and then we'll kind of dive into the specifics
Yeah,
later
for
on.
sure. Yeah, Mantle is a lot of things, and for the longest time, we've had the issue of explaining to people what Mantle really is. But I think the easiest way to put it is that Mantle is a first and foremost a DAO treasury to begin with. It started off with a different name back then as BitDAO, and it sort of evolved
Right.
into creating its own network. There was a debate between either like L1 ecosystem, L2 ecosystem. Eventually, it swayed towards L2. And then there was a whole rebrand from like BitDAO to Mantle, and ever since then we've been growing the network, and we've had a lot of success in like DeFi. So a lot of people who are building like financial applications on chain. And then we sort of went down the route of creating our own product primitives. We got involved in like liquid staking at the time, and also like creating our own wrap Bitcoin protocol, so mETH protocol, and also function FBTC.
Math. Yeah.
And we were sort of creating all these like different financial primitives, and that was kind of like our forte, right? We were building this whole financial ecosystem. We had this massive DAO treasury backed by a lot of hard assets, so like Bitcoin, ETH, stable coins, outside of our own token. So there's a lot of substantial backing behind that, which effectively can support a lot of the people who are building in the ecosystem, right? So effectively being able to take any project from each stage of its product cycle, so 0 to 1, 1 to 10, 10 to 100, and then nurture these teams and businesses within this like layer 2 ecosystem, which is very cheap, very EVM compatible. People coming in from developers coming in from like Ethereum or any other like layer 2 ecosystem will have a very familiar experience. And then obviously being able to support them with like grants, treasury liquidity, investments and stuff like that. So I think that's kind of like the unfair advantage that Mantle has. And yeah, since then we've spun out multiple like business units with our own like products like the UR Neobank, and Enhanced Index Fund MI4, and also like an AI incubator, MantleX. But yeah, it's a whole ecosystem of a lot of things. So I would say it's a financial liquidity layer, or I would say a banking chain.
Yeah, it's a great primer. Was it? Am I correct in saying that it was the largest DeFi treasury at the time?
Yeah, at one point,
It was up there, right?
when ETH was pretty high, our treasury was
Okay.
like, I would say 4 billion plus. Now it's slightly lower. But yeah, in terms of like Web3 companies, Mantle Treasury is definitely one of the largest in the industry.
Right. Yeah. Yeah. I think it's great that you emphasize that, especially like when you have these kind of chains of large backings, like not every chain, not every chain has that, right? It's a luxury. It's like a privilege, right? So you can kind of tackle these use cases and some longer term initiatives that make much less sense for teams that just do not have like those funds at their disposal. So yeah, I think starting off with like the like liquid staking stuff is great, and then now you guys are building some like actually pretty novel primitives, as you alluded to, right? So I think let's start with the most recent one, UR. Yeah, I guess. Well, it is a pretty recent product, so I guess kind of like go over what it actually is for anyone who doesn't know. I know it's only available in like select countries right now, right? So yeah, kind of what is Mantle UR? What's the problem it's trying to solve, and like why did the team decide that this should be like a problem for the Mantle team to solve instead of just
Yeah,
someone
for sure.
else?
That's a good question. I think just to preface that, I think for the longest time, like crypto or Web3, and especially like traditional finance has always been living in like two separate worlds. For a
Hmm.
user to go to and fro in these two worlds, it's oftentimes can be tricky depending on where you are in the world, what kind of jurisdiction you're in. Some are more friendly than others, and some are definitely not. So for assets or capital to flow between these two worlds, it's very hard, right? So what we sort of wanted to create was a sort of solution to merge or blur the lines between these two worlds. So UR, which is a crypto first neobank, is essentially a money app that allows users to move very freely between traditional banking rails and also the world of crypto and Web3. So no longer you will have like these two worlds, but you'll just have like finance and banking, right? And what that essentially means is that UR will, for every user that KYCs with UR, they will get a Swiss bank account, multi-currency bank account. They will be given like a IBAN, like banking number that they can actually receive and send fiat currencies to and from like their existing like bank accounts wherever they are in the world. And then we also give every user like a virtual debit card where they can use to spend their fiat currencies, and also their crypto assets from the non-custodial wallet side. So currently we have 4 main currencies to begin with. So US dollars, euros, Swiss francs, and also the Chinese yuan. And yeah, it's a Swiss fintech banking license, so it's fully regulated in Switzerland in Article like 1B, I think. And yeah, for every user
Okay.
that KYCs, they'll be able to very freely spend their fiat currencies, spend crypto, convert crypto to fiat, to and fro, and then eventually be able to like invest in more like sophisticated products like wealth management solutions, DeFi applications, and stuff like that. So yeah, I think it's very interesting.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance.
Yeah. I mean, so do I. Yeah, I definitely kind of resonate with that. Yeah, the vision to kind of build out that like neobank, fintech, whatever you want to call it, that whole kind of product suite. I think that yeah, I mean, so far you have like you actually have like some delivery apps as well. I think like
Yeah.
Grab in Singapore. I use a Chinese delivery app that also accepts stablecoins, but it's got to be like less than 5% less of people that actually use those options, right? They're just using like their local bank or yeah, their regional payments application, and you have like world yeah, the world scan as well. But I mean, outside of those kind of like two use cases, yeah, it really is. You don't really see that kind of like off ramping of crypto, and then finding its way into the
Yeah, for sure.
real world.
Yeah, I
So
think where
yeah,
where it really shines like for UR is especially allowing people to spend very easily. Like because like for
right,
for users in Web3, it's um people are very used to making a lot of money and losing a lot of money. But oftentimes when you try to like bridge it out or get it into like the real world, it's usually quite hard, right? So I think having the virtual like debit card that they can use for payments through like Apple Pay, Google Pay, and all the um like virtual payment apps. I think that's a very strong use case. Just allowing users to spend whatever they've earned, right? And then bring that to the real world very easily.
yeah, for sure. I mean, it depends so much on the given country as well. Like yeah, I know U.S. like some banks just like completely chill with it. Other banks, it's like yeah, you might have to. It'd almost be easier like actually open up a new bank and yeah, I have friends like in Australia. It seems like it's like especially hard in Australia to get the off ramp. Um, Pretty strict about that, and yeah, so I think it's the off ramping part. Yeah, I think it's definitely good to emphasize is like if yeah, if you could actually spend this stuff easily, like maybe be a little more
Yeah.
conservative, and like your on-chain trading and all that. Yeah. So, and the other thing is I think it's pretty interesting that you guys chose the like just multiple currencies from day one. Yeah, like you have a few kind of like separate options. Like you have Pay. You have things like that that kind of try to make it easy to send stablecoins to a debit card and like link to Apple Pay and all that stuff. But it's not. Yeah, like at the end of the day, most people they're buying stuff in
Yeah.
their home country, right? And their home country is not like their bills aren't in dollars. Um, so I thought that was a really good approach. And yeah, I guess what was the team's kind of thought process behind that? Like it seems like that was kind of like a key focus point. And I also want to know like how long has this been in the works? Because right now, stablecoins are obviously like the big deal on the U.S. side, on the state side. Um, but you guys are kind of like more like who knows how long it takes before you can actually use stablecoins, even with all this regulation like improving. Like who knows before you can actually spend
Right.
them in real life, right? And you guys are like, okay, we need to like get it fiat first and have a quick way to do that. So like, how long has this been in the works? And yeah, kind of like just explain a little bit more on the multiple currency aspect because that's
Yeah, for
pretty
sure.
unique.
Yeah, to be honest, like this whole idea of UR and like the whole product development was pretty quick to begin with. I think it took us like 3 to 4 months from idea to actual product.
Nice.
We have a pretty stacked development team and product team that managed to pull through. We initially we acquired a existing neobank with a couple of those like
Mm.
existing infrastructure already set up. So what we have to do was mostly tailoring it to our needs and provide the services we wanted to provide. So in that sense, I think for such a product with such a vision, I think like 3 to 4 months is a pretty quick um pretty quick idea to product timeline, right? So
It is. Mhm.
but yeah, onto like multi-currency accounts, I think the rationale there is it's really about enabling people to spend in their native currencies, right? If you're from like Asia, I think it will make sense to hold like your own fiat currencies, because like your bills are in those currencies, whatever you spend on is in those currencies. And it's also very useful for users coming in from countries that have really high inflation rates, right? So places like Argentina, Greece, these countries, they kind of have no choice but to adopt like foreign currencies or foreign stablecoins, because like every day their currency is just devaluing against the US dollar, right? Because either there's government mistrust, there's a lot of money printing going on, and it just doesn't make sense to hold your own country's fiat currency because it kind of behaves like a shitcoin. And then just it makes sense, right, to just hold like US dollars and being able to spend with US dollars, which is a much more stable and larger economy, right? So yeah, that was roughly the rationale behind that.
Yeah, I definitely think, especially like as you mentioned, yeah, those emerging markets that have like super high inflation, um, like yeah, just making it because right now it's like okay, currently you can have stable coins. Like people in these places use stable coins for like large purchases, especially. But if you want to like, there's like an in-person element still a lot of the time. Where like they're like yeah, they're gonna have to like agree to buy something with USDT. Like it's not seamless. Yeah, you can't just like swipe a card and then that conversion process is done on the back end, right? You still have to think about it, which is obviously not ideal. So I
Yeah,
guess
I guess it's also from like the efficiency standpoint, right? Like if we enable
right.
people to spend directly in fiat currencies, there's less fees that you have to go through. If you're spending through like maybe stablecoins where you need to probably swap it for the underlying fiat currencies, there's some delay there as well. So, and I think a lot of like existing solutions, especially like cards for like crypto assets, the fees are generally quite high. So I think
Hmm.
what we're doing here with multi-currency accounts is probably the more elegant and efficient solution.
Yeah, I mean, I definitely look forward to the expansion of countries, or I guess on the
Yeah.
note, like maybe you can't expand on it too much, but yeah, what is the timeline like? Like how many countries is it currently available in? And then you guys have like plans to scale that
Yeah, I
up?
think right now it's available in like 40 plus supported countries. So the issue is that it really depends country to country, whether we're able to market our services to those countries and like the people from those countries. And also it will help to have like a banking partner within those like jurisdictions,
Hmm.
just so that we can support like the um, bank transfers directly from the neobank itself. So I think that's the main blocker for a lot of these countries, given that some of these countries aren't so advanced with their um, financial regulations, banking regulations, and they're not so open to such companies operating in their country. So yeah, it's really it's a work in progress. Obviously, we want to support as many countries as we can, but yeah, it takes time.
Yeah, I mean, I think it's definitely worth noting. Like you just had Stripe kind of like, especially recently or starting in October with the big bridge acquisition, 1.1 billion. And then they started like, yeah, like in countries that Stripe normally would not be allowed to operate in, they started offering this like stablecoin financial account. Like it doesn't have the word stablecoin in it. It just yeah, it's an option on the back end, and all of a sudden they're like allowed to operate in um I think it's like 101 countries or something like that. And then yeah, a lot of which like they previously were not able to serve. So and then yeah, Stripe has gone on to do a lot of things and integrate other partners like on the fintech side, like Ramp, Squads, all these guys. So I guess for you guys, like what is the kind of approach that you guys are taking to, yeah, like these integrations, and like what is the like the tech stack for all of this, right? Because it's not like definitely most, well, I don't know if there's another chain that's actually trying to solve this problem, right? So what does that whole process look like, building that out, like on the back end? And then how does this actually tie back to Mantle itself?
Right. So yeah, maybe I can walk you through like the user flow. Then you can kind of see like how it kind of works in the back end. I'm not too privy to like the details of like which providers we're using and stuff like that. But at a high level, I can definitely share like how it kind of works. So for every user who wants to sign up, they got a KYC. That's first and foremost. So they sign up with their email or Google account. The KYC process is also based on like geolocation. So we capture like where they are in the world. If they are based in any of the supported countries, then they pass like the first like gate. And then after that, we go through like some biometric passport verification, get them to sign like a wallet signature, and also do some like risk assessment and risk evaluation of like what kind of user they are. And then after that, for each user that signs up, a NFT account number is minted. This kind of serves as like the unique account number for each user. It also holds like their IBAN, their Swiss IBAN number, which they can use for like cross-border payments and banking. And then users can also deposit funds to that NFT, which is essentially their account. So that's how it kind of works in the backend. For all like fiat side of things, we are working with a essentially can custody the fiat currencies ourselves, given we have like the fintech license. The fiat currencies are backed 1-to-1. So for every like fiat currency that is brought into the UR app, we have to have that in the bank account. So currently it's not insured, but in the future we plan to have attestations for users to sort of verify the one-to-one backing. So yeah, that's how it currently is run.
Yeah, definitely interesting. Like you also had the Solana phone shipping out this week. Yeah, obviously the phone comes with like an embedded seed phrase. So yeah, I think this is like a pretty interesting approach, having like the IBAN number. Yeah, like this kind of, it's obviously like an off-chain financial primitive. Yeah, in the form of an NFT. Pretty interesting stuff. So yeah, I guess like,
yeah, for sure. And I think like the probably the key point is that the NFT itself is minted on Mantle Network, right? So
yeah,
it goes hand in hand with what we're trying to drive with like the whole Mantle ecosystem and bring these users on chain.
Right. Okay, and then before we move on, because you guys have a lot in the tank, right? Actually, even beyond I guess like, yeah, I mean, on the note of the Mantle chain, like how does the Mantle chain itself, like beyond the NFT, tie into this? Like, are there any possibilities down the line that could be added? Like, I know EtherFi is kind of also doing like that neobank thing, where they have a bunch of ETH sitting there, right, to allow people to like borrow again and spend. Like, could you guys do anything like that? Would you guys do anything like that, like kind of combining your existing DeFi ecosystem with this neobank?
Yeah, definitely. So that's actually one of like the key points that we're trying to lean on, especially from like the product side of things. One of the innovations that I think will be very interesting is the integration of EOA wallets. So having users who have active positions in like DeFi be able to link this EOA wallet with their UR bank account, and then be able to spend directly from their debit card. So essentially spending their DeFi yields directly from their cards. So if let's say you have a position on maybe Aave, for example, and you're earning yield on your stablecoins, that yield is accumulating, and you haven't claimed it yet, you can go ahead and just like use your card and buy anything with that yield. So you can just go to the convenience store, just buy buy some drinks and stuff like that, and spending it all directly from your DeFi yield. So in that sense, it's a very strong DeFi off ramp, allowing users to actually spend these funds that they've generated in a very seamless manner without having to go through multiple hoops and off ramp solutions.
Right. Excellent, excellent. So I think you guys also have MI4. That was one of the other alternatives that yeah, I think you guys kind of pushed prior to UR. So I definitely think like the whole index like space in general is kind of underexplored. I mean, you had like a few kind of nascent DeFi projects kind of did take
Right.
a stab at it. So yeah, for our audience, can you kind of explain like what MI4 actually is? Like who is this the I guess target demographic for this? Is this for like individuals, is it for, or institutions? And then yeah, like what is the kind of overarching vision behind the product
Yeah, for
itself?
sure. So I think the general thesis kind of started out around the idea that there were a lot of like institutions and companies who are generally very interested in the Web3 space. As we're seeing now, right? Like a lot of funds are buying up like BTC and ETH. So it's quite evident. So I think what we wanted to do was, okay, you have a lot of these like traditional funds who are very familiar with like traditional fund structures, um, but they don't really know how to take the next step into getting into like the Web3 ecosystem, right? So what we're offering with like MI4 is an investment vehicle that is very familiar to these sorts of high net worth individuals or capital allocators in the traditional fund structure, an index of or a basket of like crypto assets, which is also enhanced with like yield bearing alternatives. So having things like Bitcoin, ETH, Solana, and like stablecoins, but provide these investors with enhanced yield bearing versions of them. So things like mETH, FBTC, Bybit Sol, which is a liquid stake Sol, and also like Ethena's SUSDE. And then we're essentially being able to offer yield on top of this like beta exposure that these funds are getting. So currently it's a $200 million AUM. Since we started it, I think we have about like 55% returns year to date. And on top of that, we have
Wow.
we've provided investors with like 2.6, 2.7% yield on top of their assets. So yeah, it's basically being able to serve these traditional TradFi capital a very seamless and easy product that they are more comfortable with. Instead of them like creating their own wallet, custodying their own like assets, and then potentially losing their seed phrases, right? So this is what we are sort of offering that. And then obviously having like a fund manager to manage positions and rebalance the portfolio.
Right, right. Yeah, I mean, I think the whole, I mean, there's obviously demand for a product. I mean, you had the Solana staking, the Rex Ospreys ETF come out, not that big. Rush, I think it's like a decent
Yeah.
size, like over 100 M, right now. But it's yeah, it's like the only one, right? And then you had the SEC yesterday come out like very open and yeah, kind of like giving a green light to liquid staking in particular, like even like giving names like
Yeah.
Jito Soul and all this. Um, so yeah, I definitely think like the regulatory situation is improving. The demand is already there. Um, and then yeah, I think I actually heard it was Kyle Samani on a podcast recently. He said something kind of interesting on like the crypto treasury companies. He said it'd be more interesting if instead of just like buying ETH or Solana, they actually like kind of found a way to like, give exposure to like the applications within the chain's ecosystem instead of just like price exposure to the
Yeah.
native token. So yeah, stuff like that is definitely interesting. Is not yeah, but it's something that not many people are actually like trying to do, and especially not like for like an institutional crowd. So yeah, I think let's talk a little bit more about like kind of how it works. You mentioned like the risk management and like how funds are managed. Like how does that process look like? Um, just yeah, to the best of your knowledge, like what is the kind of like back end look like for all of this? And then is this a global thing? Like are you guys getting interest from like US funds? Is there any regional like variances and who this is being pitched to?
Yeah, right now it's generally being pitched to a lot of like either traditional funds, high net worth individuals, people like friends of friends who have a lot of capital and sort of want to deploy it in a very um, easy and seamless way. I think the general target is mostly like institutional investors, definitely not like retail users, right? It's a
Right.
convenient way for them to get like beta exposure. Um, we're working with Securitize. So it's a product that we also encourage like a lot of the investors to tokenize on chain, if they want to use it in like potential future like on chain use cases, right? So it's kind of like a red pill, blue pill kind of situation, right? We give them the red pill and bring them into like the whole Web3 ecosystem and potentially get them to bring assets on chain and actually get involved in like DeFi. So like potential use cases would be collateralizing their MI4 position and maybe using that in like a lending protocol and stuff like that. But yeah, in the back end, it pretty much works like a traditional fund structure. So we have like term sheets that we send to all the investors. There's like quarterly or not too sure whether it's monthly or quarterly like reports to the investors. Everything is like fully 100% backed through like Fireblocks as a wallet solution. And then obviously we have like the fund manager that's manually doing a lot of the rebalancing and asset allocations and like timing when to go risk on, risk off, and stuff like that. So yeah.
Yeah, I think it's great to touch on that. Um, yeah, and I mean, 55% year to date is pretty crazy. Yeah, that definitely is. And then I guess before we move on, like yeah, you mentioned potentially like bringing this on chain as collateral. Like, are you guys maybe looking to get involved with like tokenized stocks and stuff on Mantle? Like we have it on Solana. I know I believe Bybit is a partner of
Yep.
X stocks. Am I mistaken? So yeah, is that something that you guys are looking
Yeah,
at all?
definitely. I think it really goes hand in hand with what we're trying to build as like the banking chain or this financial hub, right? It really makes a lot of sense. So allowing users access to tokenized real assets, anything from like commodities to stocks to indices. It's a vertical that I think for the longest time it's been pretty hard to tackle. And in recent times we've gotten a lot of like innovations with like X stocks and there's a few other players as well that are building similar products. But I would say the main issue is like the liquidity fragmentation. Because like if you're
Right.
bringing all these assets on chain, and putting them on like 10 different chains, there's going to be like 10 different AMM pools, and it's going to be quite difficult for a lot of users to access it, especially with size. And yeah, I believe like the most seamless solution is to directly use liquidity, like just in time liquidity from the actual like US stock market, right? So whenever you're buying, let's say stock maybe goes through like some kind of like RFQ solution, and then the tokenized asset gets minted to your wallet directly, right? When the market is open. Then if you want to trade it 24/7, then you got to put it into the AMM pool. So those are some like solutions that we are currently exploring and trying to build around. I think what's more interesting for us is being able to utilize these assets in DeFi as well. So getting our like DeFi primitives prepped for RWA assets, being able to use them as collateral, potentially use them as yield-bearing RWAs, creating vault products out of them, and just like creating more like structured products that I think would be pretty interesting, and very composable and DeFi native. So yeah, it's definitely a vertical that I think is very interesting to me.
Yeah, and I think especially at the current, at the current state, like it's a vertical that is pretty interesting to lot of people right now, especially. Definitely some challenges on the liquidity side. Pretty, yeah, like kind of low trading volume so far as you'd expect. Yeah, I think there's definitely some other ways to kind of tackle how it's handled. And then you also have like it's like every other day that a big like kind of TradFi institution is kind of like flirting with the idea of doing stuff on chain or stable coins or both. Like you had international brokers talking about like considering using stable coins for trading. So yeah, I mean, I definitely think like the momentum is there, and yeah, I look forward to seeing some developments on that side of
Yeah, definitely. I think the
the
demand is
table
is
from
definitely
Mantle.
there, right? Like there's a lot of
Right.
users based in jurisdictions where they can't get access to like the global US stock market. So I think what the degens want is essentially a easy access, right, to these like assets. So things like using a DEX to purchase like tokenized RWAs, or potentially using getting access to leverage on these RWAs. Because I think that's what they really want, right? Maybe you can go like 10x to 100x long on Tesla, which you can't really do very easily on like traditional TradFi rails, right? So I think those are some things that we are definitely exploring and trying to figure out like how best can we tackle it at the moment.
Yeah, I definitely think like the advent of perps
Yeah,
could be interesting and much more intuitive than options. And you're even seeing yeah, you have a couple projects now, um, kind of facilitating that, but for private
yeah,
companies, right? Like SpaceX and Stripe, all that stuff. And then yeah, I mean even beyond like individual capital, you have I mean there's like a ton of the U.S. stock market is basically owned by like just non-Americans. Like
yeah,
it's foreign capital. But they have to make like all these companies in like UK and Luxembourg and all this stuff. And yeah, I mean, I can maybe even see a world where like it's some of the on-chain primitives are like serving beyond like the like individual retail user base and even targeting like on a broad um, institutional client base. But yeah, I think I mean, a topic for like a whole nother
yeah,
episode, to be honest. But yeah, I mean, you actually are like you are the um, DeFi growth lead. Right? You're pretty knowledgeable on all the products. But I think let's on the DeFi side, right? Like we have to talk about obviously some of the more like core products that first came out on Mantle. Yeah, mETH and FBTC. I guess can you kind of walk me through like first let's start off like with like what was your I guess strategy and actually like growing these like across chains across Mantle and then
yeah.
Ethereum mainnet as well, which is I don't yeah it's not something that's like very common to have that kind of like homegrown product um, have such adoption on another chain, right? So yeah, like how did that come about? And then like what is the kind of current state of the Mantle DeFi ecosystem? Like what is the focus besides like the fintech stuff that we just discussed?
Yeah, for sure. So for products like mETH, I think to really understand how it came about, we've got to set some context. Um, Back then, when we were sort of ideating mETH, it was when the Ethereum chain was about to switch from proof of work to proof of stake. And then there was a lot of like
Mm.
Lido was doing really well. There was like Rocket Pool that just came up as well. Yeah,
Yeah, it
that
was a
was a
while
while
ago.
ago,
I
and
remember.
we thought beyond like the layer two network, what else can we do to sort of bring more users to the ecosystem, provide them more sophisticated yield sources. And the most obvious answer at the time was the risk-free rate of crypto, right? Which was ETH staking yield. And that's what sort of gave us the idea to create like Mantle ETH or mETH, which is still a funny ticker to me to this day. Yeah, ever since then we've gotten quite a lot of success with mETH. I think the product execution was done really well. We had like a whole points campaign that brought lots of TVL to Mantle. I think at one point we had like 500,000 ETH staked in mETH protocol. It reached like the fourth largest in TVL sometime last year. I think now it's fallen off slightly, but yeah, I think a lot of the attention has gone elsewhere to chase higher yields. But yeah, I think for what it's worth and what we did with mETH protocol, and I got into like the whole restaking narrative with the restake version of mETH, like CMETH.
Right.
I think we managed to capture quite a lot of TVL attention and bring a lot of that to create like interesting strategies, DeFi farming strategies on Mantle. Yeah, because like most of the LSTs back then were mainly on like Ethereum, and if you really wanted to use them in like gas fees were still pretty high back then. So if you wanted to do like DeFi farming strategies, it was still pretty costly and inaccessible to like the retail user. So yeah, we thought as one of the more like well-backed layer 2 ecosystems with a treasury, we were able to support a lot of that on-chain liquidity for mETH and CMETH pairs. So I think, and beyond that, like FBTC, where that sort of came about is like we saw like Wrap Bitcoin, the Wrap BTC protocol. There was some FUD about it, but I really forgot like what was that all about. But eventually we wanted to create our own like more composable and easily accessible version of Wrap BTC, which eventually became FBTC, right? That we are able to create a lot of like partnerships and integrations for users who wanted to use like wanted to get exposure to Bitcoin, but at the same time also participate in like DeFi farming strategies. So that brought a lot of interesting partnerships to Mantle as well. There were a lot of like BTC-Fi protocols that were coming up, like Bedrock, Avalon, and all these other like BTC-Fi teams. And what really gave us a push was essentially like a joint venture with N-Alpha. So N-Alpha is the parent company behind the Ant mining pool, one of the largest mining farms for Bitcoin. And yeah, we really worked with them to bring a lot of that BTC to EVM chains, Mantle in particular. So yeah.
Yeah, I mean, I think it's important to talk about some of this stuff because it's kind of like, especially for Mantles, like sometimes it seems like it's like quiet adoption. It's like the numbers are there, but like you don't hear about it as much as some of these other, like whether it's liquid staking protocols or other L2s or L1s. They might have like an announcement or something, and you guys are like kind of pushing stuff out there. And yeah, I feel like it's a very like pretty core primitives. And then sometimes it doesn't get like the like retail attention that you might expect, which is actually like I think you can view it as a good thing in some ways. I guess on that note, like, what are your guys' thoughts on Ethereum? Because like, I mean, you guys are you guys are now too, right? So what are your thoughts on ETH? You hold a bunch of ETH. I mean, until a couple of months ago, ETH was kind of like it was kind of like the ugly duckling asset. Now it's kind of like the golden goose. Everyone wants a piece of it. even like firms outside of crypto. So yeah, like what are your thoughts on Ethereum, and ETH as an asset, I guess, at this time?
Yeah, for us, we've always been very Ethereum aligned, even through the times when things got really bearish
Mm.
and everyone was picking on ETH and ETH holders. Because I think back then it was very much like a risk-off environment, right? There was pretty much no trading.
Right.
There's no speculation. We were basically in a high interest rate environment. There's not much capital to go around. And the only thing that made sense was just buying Bitcoin. So I think as an asset, it was severely undervalued by what it was offering. Like the Ethereum network has been around for over a decade now, 100% uptime, and has facilitated billions, maybe trillions of dollars worth of transaction volumes, and also the creation of very reputable like decentralized applications like Uniswap, Aave, and so on. So I think for us as a Ethereum Layer 2 and soon to be like ZK EVM, we've always been very ETH aligned. We think that ETH is definitely the main ecosystem that will lead the charge, especially through reaching like, especially if we want to change like the whole financial ecosystem, TradFi rails, getting everything on chain. Ethereum is definitely the most secure solution out there. So yeah, I think for us, we're pretty ETH maxis. But yeah, we try to stay nimble and modular with our chain. So hence why we've taken various steps to improve like certain aspects of the chain, like EigenDA as like the data availability layer, and exploring
Right.
like ZK VM, ZK proofs for enhanced security and less like and lower like withdrawal periods, right? So yeah, we've always been a big supporter of ETH.
Yeah, I think that's a great way to frame it. Because yeah, I mean, like especially like the top, like upper echelons of Ethereum leadership and ETH Foundation have kind of had like some, yeah, I'll say like valid criticism over the years. But then you have, yeah, like you guys, like a top, yeah,
Yeah,
leading L2, obviously, or even like Arbitrum, like or the Robinhood partnership. Yeah, you kind of have like that opportunity. Maybe someone even call it like a almost a responsibility a little bit. Yeah, to kind of like pick things up where the like Ethereum itself kind of might be dropping the ball or like hesitant to engage in these kind of partnerships. But yeah, you have these very strong L2s that can kind of pick up there. And yeah, whether it's like on-chain equities with Robinhood on an Orbit chain, or like yeah, building out these kinds of like global fintech solutions, which is very like in
yeah,
line with the original like message of Ethereum, right? Yeah, I think it's good to see. It's like yeah, it's like you're like I mean you hold
yeah,
a ton of ETH in the treasury. So like what better way to kind of support the asset and the network than like building out these kind of
yeah, for sure.
core primitives that ultimately like
Yeah,
grow the
I think
pie.
to your point as well,
Um,
like the Ethereum Foundation or ETH in general doesn't have to take like super innovative moves, right? It's meant to be the
yeah,
most secure, um, the most trustworthy chain, in the industry. So I think them enabling a lot of the L2s to sort of strive for innovation and like growing the pie outside of like the mainnet itself is a good way to go about it, right? So eventually they still rely on Ethereum as like the main security layer, even though it's the slowest mover, right? But yeah, it's been the most secure as we've seen. That we have seen many other chains come and go, layer ones and layer twos. But yeah, I think Ethereum is the one that will always be here, regardless. So if we're looking to onboard serious capital, serious investors, and traditional companies, I think this is definitely the chain that they will want to use.
Yeah, I mean, I definitely think it's like especially in 2025. I mean, mostly because of like Solana. People are like comparing ETH and Solana. Solana is now like yeah, it's in every continent. It's the number two most adopted chain for developers, which was not the case a few years ago. And people are kind of like holding them together, even though yeah, there are they're not like one-to-one comparisons. I kind of be like, hey, like these guys are always like, there's just such a top-down approach, or they're always like pushing all this stuff, like internet capital markets, like memes, like whatever it is. They're always like, very involved. And then you see Ethereum, and yeah, I think people kind of forget like the initial kind of ideals, I guess you could say. So yeah, but I definitely think like the layer twos, like you guys, have a pretty strong role in like yeah, kind of expanding the use of Ethereum as a network, and then you're already seeing like the use of Ethereum as an asset, like already kind of come into its own, right? Through these treasury companies or whatnot, right? Yeah, you need both, right? You can't just have like number
Yeah.
go up and then that drives everything. You need some more like fundamental syncs and applications and all that stuff.
Yeah, for sure.
But yeah, let's touch on like one more primitive on the Mantle side. Yeah, you mentioned Mantle X. So yeah, we're coming up on the hour mark. So I guess first let's go over like what Mantle X actually is. I mean, like the AI narrative is like extremely strong in and outside of crypto. Yeah, this is like affecting like companies' earnings reports, like people that don't care about like finance or crypto at all are like getting like very interested,
Yeah.
very invested in AI. So yeah, kind of what is the general theme behind what Mantle X
Yeah,
actually is?
definitely. I think just to preface, like, I think AI in general is the next big thing that is um taking the world by storm. And maybe some people have already realized it, but a lot of people do not realize how powerful AI can be. Eventually, I think most of the tedious jobs will be taken over by AI. And MantleX is sort of like this AI research and incubation arm, right? That's supposed to be used to explore the frontiers of what AI and blockchain innovation could be. Because I think blockchain is great for um, security, financial applications, things that involve the movement of money, um, and trying to figure out how AI can sort of play into that or create something that is 10 times better than what we have today. I think that's where the power is, right? So it's very much an exploratory arm that we're taking a bet on. So looking into the future, seeing what people are building, trying to figure out like where are the opportunities for us, either to both improve like our operations and businesses and how we work our workflow,
Mhm.
or create something that is groundbreaking, right? And being able to be part of that incubation process. So yeah, it's very much a bet on AI and blockchain.
Right, right. And then to be like a little bit more specific, you mentioned like, okay, yeah, you can have like some internal use cases and tooling that can come about from this. But if like say like 6 months to one year from now, like if Mantle X is like in your guys' eyes like a success, right? Like what does that look like to the outside, right? Like is that like some like applications? Is that like what are we kind of looking at as like the
Yeah, it
end
could be
goal?
anything, to be honest. Like 6 months to
Okay.
to a year is it's like 10 years in it feels like 10 years,
Yeah.
right? So
Yeah.
it's I think at this point it's really hard to say. What I believe is that we want to stay ahead of the game and evolve with how current AI innovations are evolving. So it could be spinning out an application. It could be just driving thought leadership. It could be empowering like our internal operations.
Mm.
with new ways to improve our workflows, be it through like AI generated summaries, which we use like every day. Could be like AI generated slide decks, or something that can improve like community responses with like AI agents, stuff like that. And who knows, maybe AI could replace me. But
I was gonna ask.
yeah, it could be anything at this point. But yeah, it's definitely like an exploration, I would say.
Yeah, I mean, well, you guys are already hitting the nail on the head with like some of your other core initiatives that are very focused, have like very specific goals in mind. There's some of which like you already
Yeah.
hit, right? Like with the mETH, FBTC. So yeah, I mean, you guys are like well funded enough, well capitalized enough to the point where like yeah, I think most teams probably could not like just say like have this very open-ended thing, like hey, like yeah, we don't know exactly what's gonna come of it, but yeah, let's kind of put some
Yeah.
resources towards this. But you guys do have the luxury of being able to try those things, especially with yeah, like AI. Like everyone knows, okay, this is going to like significantly impact, yeah, like anything from operations to like yeah, just net margins, all that stuff. You have Meta throwing around like these massive comp packages, just try to I guess to try and like yeah, just stay in the game. So. Yeah, I mean, I think you see companies in their earnings that announce that they're like spending a ton of money on AI
Yeah.
research and R&D. Is like they're being rewarded for it, right? So clearly, or at least in traditional markets, like people like to see um, when a company is like kind of thinking about these things and then like putting their money where their mouth
For
is
sure.
on AI, even if the yeah like the actual end return is kind of unknown. So yeah, we're about to brush up on the hour mark. So I think one last question is like, what are you guys excited about at Mantle? I guess in the until year end, right? This can be on the DeFi side. This could be on the like neobank UR side. It can be anything. Like, what is it that you want to achieve before year end?
Yeah, for sure. I think one of the probably the most optimistic things that we've had in a while is uh, closening our partnership and like strategic relationship with Bybit as our centralized exchange partner. So I'm not too sure if you saw the news, but we basically announced that two of Bybit's executives, like management leadership team, will be joining Mantle, and basically be
Okay,
hitting. Yeah, they'll
I didn't see
basically
that.
be hitting both, double rolling on both like the Mantle side and Bybit side, to kind of bring these two organizations a lot closer. Like to give you context, Bybit invested very heavily into BitDAO back in the day. That was like four
Right.
plus years ago. Um, and since then, it's very much been two separate entities, right? They've been helping us with a lot of things here and there, but at the end of the day, it's two separate organizations with two separate goals. Um, and I think now with us being a lot closer in terms of strategic goals and aligning for the future, I think what we can create for Mantle and Bybit together would be something that I'm really excited for. Because like a chain and centralized exchange partnership is definitely something that we've seen succeed in the past, and I think it's something that we want to replicate in a much more synergistic manner, especially for Mantle, the MNT token, and the whole ecosystem in general. So yeah, I think this is probably one of the more exciting things. And then obviously we have more like product developments of like UR, getting more like DeFi integrations, DeFi solutions for users of UR. I think all that is very, very exciting. And yeah, but a lot of work to be done from now to then. But yeah.
Yeah, I'm glad you brought that up before we closed off. Yeah, we didn't even really get to touch on that, but the kind of like origins of Mantle and the yeah, relationship between Bybit and BitDAO and Mantle. But yeah, that definitely is a huge tailwind to kind of make that relationship more close knit. Obviously, like if you want to, like talk comparisons, yeah, you have like Binance and BNB chain. I mean, BNB is like a top 5 asset maybe, but even beyond token price, just like the BNB ecosystem, like yeah, when you have an exchange like that that's able to put out something like a Binance Alpha Points or whatever it is, yeah, just completely able to like supercharge the ecosystem and then get people who aren't even like involved with Binance at all, which is from other chains involved with the BNB chain itself. So yeah, definitely looking forward to seeing some of that kind of stuff coming out from Mantle, and then we'll be checking for those developments. So Gabe, I want to thank you for coming on. Yeah, this is a great episode. Good products, some core primitives that I think don't get enough like attention on the retail side. I think on the institutional side, you guys are pretty, like everyone knows the deal. But yeah, this is great. Is there any last thoughts that you want to leave our audience with before we sign
for sure, man. Thanks so much for having me. I really enjoyed this. I think it's not oftentimes I get to sit down and talk about the history and the rationale behind a lot of the stuff that we're doing and the reasons why we've done what we did and we've built what we did. Oftentimes it's like very short snippets of a much larger story. So I think being able to share this lore of Mantle in a much longer format, it's definitely something that's nice to have. But yeah, thanks so much for having me. I think for all the viewers, definitely keep in touch and keep up to date with whatever is happening in the Mantle ecosystem. Check out our UR banking app. Check out all our ecosystem protocols. I think you'll have a really great time exploring the Mantle ecosystem. And yeah, just follow along and watch this space.
Yeah, for the audience, we'll have the links in the description. Gabe, so your role is DeFi Growth Lead, but I think we discussed kind of like everything but DeFi. Like, you have so much going on over at Mantle. But yeah, great conversation. I want to thank you guys for listening, and tune in for the next
Awesome,
episode.
thank you.
Thanks.